were a naysayer for a very, very long time.
Yeah, I probably switched. For the first 3 years of thinking about it, I was a naysayer, and about 2 years ago, I switched, and I'm actually, as I said in the last 2 years, I'm a big believer.
Wall Street just got orange-pilled. The recent approval of Bitcoin ETFs in the US isn't just news, it's history in the making. This is the story of how a digital currency born from the depth of the internet has just received the ultimate nod of approval. Let's see how these ETFs are going to shake things up. For years, Bitcoin and the broader cryptocurrency market faced skepticism and outright criticism from the traditional finance sector, including banks, financial institutions, hedge fund CEOs, and financial analysts. But here is Larry Fink, CEO of Blackrock, sharing his thoughts on Bitcoin in 2018.
Importantly, when I think about most of these cryptocurrencies, it just identifies how much money laundering there is being done in the world. We're not hearing clients say, we want to use this as an asset class. No, it's not an institutional thing yet. It's far from that. As I said, it's much more of a speculative platform for Asia, and it's heavily used for money laundering. True that you're building out a cryptocurrency capability? No, but right now I can tell you worldwide, I have not heard from one client who said, I need to be in this.
But this narrative has shifted now that Wall Street wants to get involved. And with the approval of the first Bitcoin ETF in the US, traditional finance is opening its doors to Bitcoin and rolling out the red carpet.
A few moments later,
I think it's just an example of the pent-up interest in crypto. And we are hearing from clients around the world about the need for crypto. And I think there's more people running into a fight to quality, whether that is in treasuries, gold, or crypto, depending on how you think about it. And I believe crypto will play that type of role as a flight to quality.
The same institutions that once criticized Bitcoin are now praising its virtues and potential as a legitimate financial asset.
Let me be clear. I think ETFs are step one in the technological revolution in the financial markets. Step two is going to be the tokenization of every financial asset. And to me, this is where we believe it's going.
This change of heart is driven by Bitcoin's resilience and potential to act as a hedge against inflation. Moreover, the introduction of financial products like Bitcoin ETFs has further legitimized cryptocurrency in the eyes of traditional investors. This transformation from skepticism to endorsement shows the evolving understanding of Bitcoin's role in the financial landscape, acknowledging it as a real asset. As the saying goes, if you can't beat it, join it. And it looks like that's exactly what Wall Street has done. So, without further ado, let's see how Bitcoin ETFs are changing the game. So what is an exchange-traded fund or ETF? It's a type of investment fund and exchange-traded product, which are traded on stock exchanges. ETFs hold assets such as stocks, commodities, or bonds, and generally operate with an arbitrage mechanism designed to keep them trading close to their net asset value. They've become a cornerstone of traditional investment strategies due to their low expense ratio, tax efficiency, and stock-like features, offering a diversified portfolio to investors in one single transaction. These contrast with the journey of Bitcoin, which emerged in 2009 as a decentralized digital currency without the need for a central bank or a single administrator. Bitcoin just turned 15 and has a perfect record. There hasn't been any single mistake in validating transactions, making it the most secure network in the world. The fact that it is decentralized and therefore doesn't have one entity managing it helps avoid corruption, which is unfortunately a common practice in our financial system. The integration of cryptocurrency with traditional financial instruments like ETFs marks a significant milestone. This fusion not only enhances the legitimacy and accessibility of cryptocurrencies like Bitcoin, but also offers traditional investors a familiar, regulated, and safer entry point into the crypto market, thereby expanding the potential for broader adoption. With the launch of these ETFs, Bitcoin received the level of regulatory and financial approval needed for massive adoption. Now, institutions can get involved. Corporations can also add some to their balance sheets instead of keeping fiat money that is losing its value more and more every year. Also, any retail investor wouldn't buy Bitcoin because they found it too complicated can easily just buy one of the Bitcoin's ETFs the same way they would buy any other stock and get exposure to the asset. So why this such a big deal? Primarily because with Wall Street joining the party, you can expect that their sales teams are going to educate clients and advise them to allocate a portion of their portfolio into a Bitcoin ETFs, since Bitcoin has been the best performing asset ever. And let's not forget that because it is so scarce, that makes it a superior asset to hold in the long run. Think of it as digital gold, but even more scarce, or digital real estate, since real estate has been one of the best store of values over the years. Out of all 5,500 ETF products ever launched, Bitcoin ETFs had the best start. Never before in history has a fund reached $3 billion in asset under management in the first 30 days. And with Bitcoin ETFs, two of them did it, Blackrock and Fidelity. The 11 Bitcoin ETFs have grabbed 5% of the total Bitcoin supply in the first 30 days. Just for perspective, that's 12.5% more Bitcoin per day than the daily issuance, which is insane demand. In the long run, Bitcoin ETFs are setting the stage for real shifts within the investment and cryptocurrency sectors. For traditional investors, Bitcoin ETFs offers a gateway to digital asset exposure through a familiar and regulated vehicle. This accessibility is likely to attract a broader base of retail and institutional investors, integrating cryptocurrency into a conventional investment portfolios. And for the cryptocurrency industry, the acceptance and success of Bitcoin ETFs signal a maturation of the digital asset, fostering an environment where cryptocurrencies are not only more accessible, but also increasingly viewed as a viable and valuable part of the global financial system. And next on the list after the US is Hong Kong, as regulators have accepted applications for Spot Bitcoin ETF, which will provide an influx of capital from the Asian market. And I can only imagine what the price of Bitcoin will be when the Middle East allocates a portion of their sovereign investment fund. So, how does that translate to the price of Bitcoin in 2024? Well, we're sitting at $50,000 at the time of this recording. And there's no doubt that the demand shock we're experiencing right now for these ETFs is making the price go up. But we also have a supply shock coming in April with the Bitcoin halving. That is the code written into Bitcoin's mining algorithm to go against inflation by cutting the supply in half every 4 years to maintain scarcity, which, by the way, is the exact opposite of our fiat currency, which has been printed consistently since 1970s. So, in my opinion, demand and supply shock are setting the stage for new all-time high prices this year. Let me know in the comments down below if you think Bitcoin will reach new all-time high in 2024, and what is your price prediction? Alright now, so investing in a Bitcoin ETF comes with its own set of pros and cons. On the upside, ETFs make jumping into the Bitcoin world a lot easier for people who usually invest in more traditional stuff, like stocks. This is because a Bitcoin ETF is watched over by financial rules, making it a safer ride for those who might be a bit nervous about diving straight into buying Bitcoin on their own. But the real benefits are that you won't pay any taxes at all on your gains if you buy the ETFs with a tax-free account, such as TFSA or RSPs in Canada, or your Roth IRA or Roth 401k in the US. And looking at Bitcoin's massive potential profits, it's a huge plus to not have to worry about capital gain taxes. In Canada, we had a Bitcoin ETF and Ethereum ETF since February and April 2021 respectively, and I took full advantage of buying both ETFs with my tax-free saving account. On the other hand, I know that the volatility has been a turnoff for a lot of investors who cannot really stomach the huge drops. But like any other investment, holding Bitcoin long-term is best to avoid worrying about short-term volatility. Obviously, no one has a crystal ball, and in the short term, anything can happen. But everyone who has held Bitcoin for more than 3 years has made a profit. So buy and hold seems to be the best stress-free strategy, which also happened to be my favorite strategy for real estate investing. Also, the true Bitcoiners argue that investing in a Bitcoin ETF isn't the real deal of owning cryptocurrencies, since you are not holding the Bitcoin keys yourself, but rather a piece of paper that says that you have a share in a pot of Bitcoin. Not your keys, not your coins, they say. Think about it this way. Buying the Bitcoin ETF or buying Bitcoin and leaving it on an exchange, therefore not having your Bitcoin private keys on a cold storage wallet, It's like buying a house and having the property manager on title, and he is the only one who has your keys. So technically, it is your house, but you can't access it. As long as you're trusting the institution who holds your keys, that's fine. But I do understand the argument because Bitcoin was created so you don't have to trust a third party. That's the beauty of being decentralized, and you can be the custodian of your money. It really is the same as buying physical gold compared to buying a gold ETF. But in the end, you have to see what works best for you, and if you are comfortable managing your private keys on your own. Or would you rather have the convenience of buying the ETF? Are you able to take advantage of a tax benefit account? Or do you plan to hold Bitcoin in the long run and want to make sure that no one can access it but you? Let me know what you think in the comments down below. Alright, so to wrap this up, make sure that you do your due diligence. Everybody has a different risk profile. As for me, it seems clear that it is riskier now not to have any exposure in Bitcoin than it is to own Bitcoin. It looks like the next couple of years are going to be very exciting for investors and Bitcoin holders to watch the massive adoption take shape. And actually, for the whole crypto world in general, as there's already rumors of Ethereum and XRP ETFs floating around.
Value in having an Ethereum ETF. As I said, these are just stepping stones towards tokenization. And I really do believe this is where we're going to be going. We have the technology to tokenize today. If you want to think about this. If you had a tokenized security and you have a tokenized identity, you, Andrew, the moment you buy or sell an instrument, it's known. It's on a general ledger that is all created together. You want to talk about issues around money laundering and all that. This eliminates all corruption by having a tokenized system.